Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market and figure out what is happening with this stock and why it's pretty much doing a whole lot of nothing, but when it may actually finally start doing something. And I think it's going to be sooner than people think. And well, what that actually can be. So let's dive into it. If you enjoyed, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live on YouTube. The link is down below in the description of the video. For just $2.99, you get access to all my intraday thoughts, posts, updates, technical analysis, options flow on Tesla every single day the market is open. So if you're interested, definitely check that out. We'd love to have you there. But let's just dive right into it and talk about this price action. So Tesla is closing the day down almost 1%, closing at just shy of $175 per share, which compared to the market is going to be obviously a bit of an underperformance. But for the most part, even though we had some volatility throughout the day, it ended up being a pretty much another nothing burger day, right? As we're just continually trading pretty much within this exact same range that we've been trading in for a very long time now. But as usual, whenever you get these kind of consolidations, it does mean that a pretty substantial move should be, roughly around the corner. As I jump over here to Trend Spider quickly here, what you can notice and what I want to, kind of pay your attention to is going to be this indicator down here, right? This squeeze indicator, the one with a bunch of dots and the kind of orange blue lines, right? The green dots, the red dots, right? This is the one I want you to look at. And this is important. And the reason is because, well, whenever you see these red dots, and especially you see the bars that are protruding either to the upwards or to the southwards, right? The blue slash goldish bars. So when you pretty much don't see many of those bars, which right now we're pretty much not seeing them, right? Very, very little. They're very small. And on top of that, you see a sequential amount of, and a lot of them too, of red circles, especially on a daily chart. Well, that usually means that there's a pretty substantial move building up. And it's like, and I've used this kind of, example before where it's kind of like, you have like a pot of, of water or whatever, like some kind of steam, if you will, right? And it's closed off, all the sides are closed. There's no holes for the steam to escape. Initially it's, it's building up, the steam is building up, but the longer it's going to be there, the more it's building up, the more explosive that move potentially will be, right? The more explosive the steam is going to really want to get the hell out of there, and the larger that explosion or, whatever will be. And this is, it's kind of the same idea here, where the more we consolidate, the longer and longer and longer we consolidate like this, usually the more explosive and the more aggressive that move when it finally does pick a direction will be. And this is what this indicator is showing, right? You can see back here we had a lot of red circles. Even on this move here we had a lot of red circles, and then it finally exploded, and then we actually had a pretty decent move to the downside, right? So the point I'm just trying to make here is the fact that that indicator is of course showcasing that there is a lot of squeeze being built up, a lot of momentum being built up, just getting ready to get unleashed. But let's talk about where that, momentum getting unleashed can go. I actually want to switch things up a little bit and go straight to options flow. And the reason I want to go straight to options flow is because, well, this may give us a bit of an indicator. So earlier in the morning, we did actually have a 1.5 almost million call come in for this Friday, 172 strike, and it came in at 175. And Tesla did actually rally up a couple dollars since then. So my assumption is that they're already out. However, 3 minutes before the market close, you can see here at 3 p.m. today, 57 minutes and 19 seconds. For this Friday, by the way, too, which is important to note, a almost 1.4 million put came in at the ask. I'm surprised it was at the ask, not above the ask, but nonetheless, at the ask, pretty much 1.4 million put came in, 170 strike, so it is a little bit out of the money, right? Pretty much came in at exactly 175, so roughly where we closed today. But again, it's for this Friday. So the fact that they're going in with an out of the money put for this Friday, pretty much 3 minutes before close, tells me that this whale, they could be wrong, but this whale who clearly has a lot of money to play with weeklies of all things. And it's even less than a week. We already finished 2 days. It's like a 3 day to expire essentially. Very, very high risk, extremely high risk. If they're wrong and Tesla happens to shoot up tomorrow, let's say 2%, for instance, right? And they don't exit fast enough or whatever, they'll be down a pretty, I don't know, maybe at least like 20% on this put, like within hours, maybe more. So the fact that I'm seeing this tells me that someone that is willing to put 1.4 million on less than a weekly, a 3 day to expire essentially, tells me the fact that they clearly know something that we don't. They clearly expect Tesla to make a move to the downside. Keep in mind, if we do make the move to the downside, we're very close to that very crucial level of about 173. We're at 174.77, right? Maybe we come down to just 173. Who knows? They'll make a lot of money even on that single move alone, because that would be a percentage move of about 1%, right? Even that will be actually a decent amount, especially if it happens quickly and they exit very quickly. But that tells me that the fact that they do expect a move coming downwards, right? Whether it's just that 173 or whether they expect it to breach maybe even closer to 170, because if that happens, then the move to the downside has been solidified, and we at the very least, like I said many times, go to about 170 to 168, and if breaching below that will bring us down to about this support level all the way down here at about $160 to $163 per share, right? Now, that's one side of the picture. The other side of the picture, if I go to Cheddar Flow, which, by the way, I have both of these option services in the description. If you want to use it for yourself, if you want to try using it for yourself, I have a link to both of them with a discount if you use my link, so definitely check it out. But we have Cheddar Flow here, and I always set up Cheddar Flow to look at option sells, right? This is option buys, this is option sells. So these are all sold options, right? So a green is a cash secured put, and a red is a, well, covered call, right? So the reason I bring this up is, well, number one, you can see a lot of green. What does that mean? Well, it's not necessarily bullish in the sense that you're buying a call. It's not as bullish as a call, in my opinion. But what it does mean is the fact that people don't expect Tesla to fall too much lower. And you're going to see a very common thing here. A lot of 170 strikes, a lot of 170 strikes, whether it's for this month, even some for next month. You can see here, we have some July 19th as well, right? 270K, 273K. So, but the majority of them have been for tomorrow, not tomorrow, this Friday. Especially the ones down here. You can see here, we had a 1.1 million all the way down here and a 1.4 million over here. 170 strike this Friday, cash secured put on the little bit of redness we had in the morning, right? And they sold the for 170 strikes. So essentially, what I'm trying to say here is the fact that even though this whale is expecting Tesla to move downwards, potentially even as early as tomorrow, I would assume, a lot of whales are also assuming the fact that Tesla is not going to breach below 170 at least by this Friday, if not maybe even by next Friday. So there's a bit of a battle there. So, the thing is, they both can be right, because this guy can be right, or a person that, whatever that is, that can be right. It does go down to, let's say, 172. They're up probably a respectable, like 20, maybe even 30%. I'm not sure exactly how much it'll be, but a respectable amount. But these guys could also be right with it not breaching below 170. So that's kind of the picture I'm seeing here. So it seems like, the whales are expecting it to go down, but not too much. And they expect it actually to hold 170 by this Friday. So, which would kind of counter-prove my point that I mentioned earlier, how we're building up a pretty large move to the downside, or not to the downside necessarily, but a pretty large move regardless because of that, sideways buildup like I talked about, that squeeze indicator. So I don't know. We're in quite a bit of a pickle here. I'm not gonna lie. In theory, when you do consolidate this long, just sideways and just really like tight and getting really tight, the move usually is explosive. But we'll see. But in terms of the whales, this is what I'm seeing right now. They expect it to go down, but not too far down below 170, at least by this Friday. We'll see. But that's kind of probably the main thing I'm looking at. Now, obviously, if we go back to here, right, we obviously are still technically in this descending triangle, right? If we have the descending triangle situation happening right here. Usually you kind of get tighter and tighter and tighter. You constantly make lower highs, lower highs, lower highs, lower highs, right? And then you ultimately break down to the downside. That's usually how these kind of things end up working, right? It is technically a bearish pattern. Will it actually act as a bearish pattern? Who knows? Because you can also go ahead and throw out the bias of like, oh, well, what if we're just holding something like this? Maybe this is something we're holding, but now we technically did maybe even break below. You can even argue the fact that we actually did break below it today. So, this is why I'm not a huge fan of using these trend lines that are just this subjective. You can just alter this in many ways that you see fit to really fit some kind of narrative. So I'm not a biggest fan of them on these kind of situations, honestly. But in my opinion, again, if we just lose this 173 support level, then we come down to, like I said, 170 to 168, below that 163 to 160, right? And we are technically in a bearish pattern here. But another way to look at it, if you want to make it a little bit more simple, is going to be bringing out these two indicators right here. We have the 100-day and the 50-day moving average, the red line at the top being the 100, the green line at the bottom being the 50-day moving average. It's clearly been rejecting us substantially, this red line over here, this 100-day moving average, constant rejection, but the 50 has been giving us some pretty decent support anytime we get relatively close to it. So you kind of want to, see a battle between these two. And if we really close a daily candle, close a daily candle below or above one of these two indicators, the 100 or the 50-day moving average, that usually or most likely will signal the fact that, yeah, maybe we'll go a little bit lower, or yeah, maybe we start going higher. So you also kind of want to wait for that. They're kind of converging and they are getting tighter and tighter and tighter to the point where they're pretty much at those levels I just mentioned. The 50-day moving average right now is sitting at 172, but it's getting damn close to 173. And the 100-day moving average is sitting at pretty much 181, which is another level I've been talking about for quite some time. And it is, of course, also getting lower, while the 50 is slowly also getting higher. So you want to be waiting for these, right? The MACD is still making lower lows here, you can see. So we are starting to show some signs of of some potential bearishness here, right? If I had to like absolutely pick a direction, if someone just forcefully made me pick a direction, I think it's gonna go. I personally think it'll go down. I'll be completely honest. I do think that there's a higher chance it moves to the downside than it does to the upside for now, for the short term, right? Like I wouldn't be surprised to see, 170 this week, next week. I honestly wouldn't even be too surprised mentally. You want to prepare yourself mentally to see 163 to 160 next week, the week after, sometime in June. But then I would expect, honestly, a pretty sharp move to the upside after that. Maybe as we head closer and closer to the voter date, maybe we start getting a sell-off and it'll be a massive bear trap. Maybe after the date actually passes and we get the results, maybe it'll be a sell the news. And then from there, we get a strong bounce. I don't know exactly what the catalyst will be that'll make it go down there. But I personally, if I had to really pick a direction, I think it's the downside is more likely than the upside. But as usual, you can also just be very patient with it, as I'm sure hopefully some of you have been being patient with it for this consolidation period. It's been good for me with my option selling because I sell options. That's how I trade. It's been good for me, so I'm happy with it. But patience is required, unfortunately, even though this price action is a bit of a snooze fest. It really is. Going over to the weekly candle here, right, you can see the MACD is still looking pretty decent on the weekly. It's obviously slowly losing a little bit of momentum, which is why, again, if we do ultimately come down to about that low 160s level, wouldn't surprise me to see the MACD ultimately come back down to retest this breakout above the red line, the green essentially touching the red, and then bouncing and continuing higher. So, that's kind of what that move would entail if it were to happen in such a fashion. But don't forget, we also are potentially setting up this nice, beautiful looking inverted head and shoulders pattern where we have the left shoulder over here, we have the head here, now we have the right shoulder setting up over here, and we can still come down to about that low 160s, maybe even like mid to high 150s, right? I'd prefer to hold 160 personally, but even if we could come down to the low 160s, it's still a very valid and still pretty beautiful looking inverted head and shoulders pattern, which is a pretty large one as well. So if this actually does end up playing out, Tesla will have a phenomenal maybe second half of the year, maybe especially like 2025 potentially. In theory, it should. Assuming this head and shoulders plays out, which of course, in my opinion, really truly playing out will be a break of about 198 to 205, would really start to play out this inverted head and shoulders, and Tesla would get very, very bullish, especially if we break above this red trend line up here, which is around 220, 230. So yeah, that's kind of the main thing I'm looking at right now. And that's kind of what the options are telling me as well. So, again, it sucks. It's kind of a boring price action. I'm not gonna lie. I'm barely even looking at the chart lately because it's just really doing a whole lot of nothing. I sell my cash secured puts. If I see a dump, I sell cash secured put. If I see a rally like we saw today, actually, we saw a bit of this, intraday rally where we had this random rally. We had the sell-off, and we had this rally all the way back up to about this 178 almost, right? I ended up buying back one of my cash secured puts, and now we ended up selling back down, and I'm looking to resell that cash secured put as well. And that's kind of the one I trade a little bit more, right? I have other ones that I, for instance, follow the whales on this right here with this 170 cash secured puts. I follow them on that. I'm still holding those. They're already up like 50%, but I'm letting them decay because even if we do come down there, I am currently underweight Tesla. Actually, full disclosure, I am underweight Tesla relative to my usual holdings, if you will. I'm very happy to buy shares there. I'm very happy to continue to re-add the shares back to what I, is my normal allocation down at those levels. And I do think I probably will get the opportunity to do so sometime this week. Probably not this week, probably next week or the week after, but probably next week in my opinion. And that's kind of the way I'm looking at it right now. I'm not in a rush. I think there's no reason to be in a rush. And again, if Tesla does break out above, 181 to 185, you can always just start reaccumulating there and, buying the breakout. Always an option as well. A lot of ways to play it. Really just depends on what your trading style is. But stochastic showing some signs of weakness still, right? Definitely want to see the green cross the red there to really kind of reignite that momentum back to the upside. But until we see that, again, if I had to pick a direction, unfortunately, I do think Tesla has a higher chance moving to the downside than to the upside personally. But I also would view it as just an opportunity, in my opinion, for now, until obviously maybe things change. But I will update you if I do see something like that. But with that being said and done, thank you so much for watching, and I'll see you for the next one. Peace.